The Central Bank of Nigeria (CBN) has raised its monetary policy rate (MPR) to 27.25%, marking an 8.5% increase since new leadership took over a year ago. This decision came following the bank's fifth Monetary Policy Committee (MPC) meeting of the year, with the committee opting for further tightening of monetary policy. The hike in interest rates reflects the bank's efforts to manage inflation and stabilize Nigeria's economy amidst global financial challenges. New leadership tightens monetary policy. During a press briefing at the CBN headquarters in Abuja, Governor Oluyemi Cardozo explained that the committee unanimously agreed to raise the MPR. The committee was unanimous in its decision to further tighten policy and thus decided as follows. 1. Raise the MPR to 27.25%, Cardozo announced. This decision highlights the CBN's aggressive approach towards inflation control and economic stability, despite the pressures on Nigerian consumers. Impact on Nigeria's financial system. In addition to the MPR hike, the CBN also adjusted other key financial metrics. The cash reserve ratio (CRR) for deposit money banks increased by 500 basis points to 50%, while merchant banks saw an increase to 16% from 14%. These moves aim to restrict liquidity in the banking sector and curb inflation, though it may come at a cost to businesses and consumers reliant on credit. Reaction to the interest rate hike. Economic experts have had mixed reactions to the CBN's decision. While some applaud the tightening of monetary policy as a necessary step to control inflation, others warn of potential drawbacks for small and medium-sized enterprises (SMEs) and individuals who depend on loans. The higher interest rates are expected to make borrowing more expensive, potentially slowing down economic growth in the short term. The new 27.25% interest rate represents a 50 basis point increase from the previous 26.75%, which was announced in July 2024. The continuous upward trend in interest rates reflects the CBN's focus on stabilizing the economy amid rising fuel prices, inflation, and currency depreciation. Analysts predict that the CBN may continue this approach depending on how the economy reacts in the coming months. Broader economic context. This interest rate hike comes at a time when Nigerians are grappling with surging diesel prices, which have risen by 64.58% in August 2024. With inflation on the rise and unemployment reaching 5.3%, the CBN's move to tighten monetary policy will be crucial in shaping Nigeria's economic future. However, many Nigerians fear that the increased cost of borrowing could further worsen the financial strain they are already experiencing.
Subscribe now.